Maverick Traders, welcome out to your market roundup, July 24th. Corey here with you. Let's jump into it and check out what's happening in the market.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
So today, as far as market performance is concerned, a little bit of a pause. Dow was up 0.5%, NASDAQ basically flat, Russell flat. Oil was the big mover and it was up 2.5%. So if we go to the daily news, I think oil was the big story. It surged higher. Not really a problem for economic growth or anything at its current levels. Also, flash services PMI missed at 52.4. The manufacturing number came in below 50. So actually a little bit of a recessionary number on the manufacturing, but that's been the case for some time. Manufacturing has been much weaker than the services side. Advanced decline line, about 43% decliners, 54% advancers. So again, kind of a flattish day, but the 50 period moving average still strong at 73% of stocks are above that. So as we look at the market price action, I did Thursday's market roundup and I did it a little different way because I wanted to highlight this day and the possibility of a reversal happening. Now, I had highlighted this exhaustion when it happened, and while it was an exhaustion, we didn't go any higher for the next couple of weeks. You can, again, I really feel like I kind of got this wrong in essence because I felt like we would have an ABC correction, a 1 drop. We got that. Then we would stall out here and have another drop in sort of an ABC or 1, 2, 3 fashion. Instead, we corrected sideways and then advanced further. So here I think we got similar type of exhaustion, style of trade, extended away from moving averages, overdone to the upside. But it's better than that. You can see this in the NASDAQ better than anything else. These divergences. You either believe that these have some predictive power, meaning that they're at least a good signal to tell you when you're running out of steam and running out of gas. Notice in each of these circumstances, as the market made new highs, the indicator also made new highs. So this means we're healthy, we're strong, we can continue. So was there an exhaustion? Yes, but we consolidated that off and then worked our way higher. What's interesting though is that as we've now advanced to even further highs, so we kind of stretched this uptrend even further, notice there's a clear divergence. The RSI making a clear lower high as the market has made a clear higher high. So higher high in the price, lower high in the indicator. Do you believe that that has some real significance to it? I happen to believe that. I don't use the RSI in a traditional sense. In fact, the way I teach it is when you get overbought, it's a buy signal. I want you to think of that as going into overdrive because that's where you get a short-term burst. And sure enough, it skyrocketed, right? Shortly thereafter, the overbought. So when we first got overbought, that's not a bad signal. That's, hey, we'll probably explode. There'll probably be a sharp move higher, which we did. But once you've been overbought for a while, and then you start to create a divergence, and notice this really entered the overbought back in May. It was bullish through June. Now it's way overdone, would be my take. And according to the indicator, it is running out of gas. So do you think that has significance? Well, that's for you to determine. Now, how do you know if you get a signal right or wrong? So if we have this market outlook and you're like me, you think there's going to be a bit of a correction here. First of all, to kind of look at that, you have to say, well, where am I wrong and where am I right? And you have to quantify it. You not only have to quantify it in terms of percentage moves, but you need to quantify it in terms of time, right? I can't say that I was right about this signal if the market goes sharply higher for a long period of time. Clearly, I was wrong. You can't even really say you were right if the market keeps blasting higher in the short term, even if it eventually comes back down. So in order to say, well, this was a good signal or a bad signal, we need to quantify it. So you could say something like, well, if it goes up 5% from here, then I'm wrong. If it goes down 5%, then I'm right. But then we also need to say, well, what if it goes sideways and makes no further advance? What if it takes a while? What if we go up 4.5% and then we proceed to fall? Does that mean that I was right? Well, I would sort of look at that as being wrong, even though it didn't meet these parameters. So in order to back test something and to really look at the signal and say, okay, am I getting a good signal? You've got to test it. You've got to say, you got to put parameters. What percentage move do you know you're wrong? Which one do you know you're right? Well, I'll say this. If the market goes even, let's say 3% higher, I would really feel like I was wrong about this because I'd probably have a stop loss on some of these bearish trades that would already be triggering and getting me out, and I would accept defeat in terms of that signal, right? This one was sort of half right in terms of an exhaustion because we didn't advance and we immediately fell a few percent, but we didn't really get that extra move lower, so kind of not a great signal. I would kind of say, well, that was more wrong than right in essence, even if the initial move was lower. Here we're getting the initial move lower since last Thursday's market roundup. That's good. I'm more right than wrong thus far, but I probably need to really stretch this a bit further in order for me to say, hey, this signal worked, and to put it in the positive category. So anyway, hope that makes sense that if you want to quantify, okay, did I get that outlook right? You've got to say, well, where am I wrong? Where am I right? Over what period of time? And put some numbers around it so you can actually gauge and judge it. So you can actually give yourself a grade for that signal. As we look at the heat map here, energy, no doubt strong. Energy is now up on the year, and I made mention of this a couple of times. Rob and Darren and I had a little bit of a friendly wager as to whether oil would be up or down for the year. I said up. They said down. It's gone back and forth, back and forth. I feel pretty good about where we're at in terms of oil. If the U.S. has not filled back up their strategic petroleum reserve, and they've actually sold all of that off, they have less oil in that than they have in decades. That lends itself to more buying potentially. So I really feel like oil's in a pretty good spot here. As we look at the rest of the heat map, healthcare's not done real well of late, and there's a little bit more red there, and then it's just kind of dispersed. Tesla up quite a bit today, 3.5% after what was a really rough week last week. So if you're looking at it just technically, it depends on how you grade the market, because if we just do the traditional, are you above the 20, are you above the 50, are they sloping upward? Well, it's all bullish, right? Bullish, bullish, bullish. But again, there are times where I kind of override that if I see something of substance and significance. And I might say, even though it checks all the boxes here, there are times where I no longer am willing to buy. I feel like the upside potential versus the downside risk versus the probability of success, I just am not willing to be as bullish here as I was maybe a week or so ago. When this market moved above resistance here, I didn't really trust it that first day, but the very second day it continued to advance. Well, like we've talked about, give credit where credit is due, and you'd really have to be a buyer and such in the short term. I've really flipped that on its head. I'm more of a cautious trader here. I'm much more on the zero category personally, and I've added some bearish trades in the last few days that are working pretty well, actually. I did a QQQ trade, in fact, just looking for a little bit more downside. So
have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top right, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and proprietary trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
As far as I'm concerned, again, the markets have been bullish. That's been clear. But we're now at levels where I would love to see some correction, some shakeout to the downside, really get people off the bullish side and get a little more pessimism and get a little bit more of a decline, and then we'll reassess from there. Some possible bullish and bearish trades. So just from a charting perspective, Bumble looks kind of nice. You had a breakout on higher volume. You're now pulling back towards the prior swing high on lighter volumes. It's more of the traditional bull pullback. You have a little crossover there. This is the type of chart which has been in a big hellacious downtrend. So I don't really buy the breakouts, but I would be willing to potentially buy the dips and play the next bounce and the next wave to the upside. So that's one chart that could be of interest. And in fact, I could even add, maybe you can see a little inverse head and shoulders there. Do you see the lower lows, higher lows? The reason they call this an inverse head and shoulders is it kind of looks like a guy here standing on his head, and there's the shoulders, and it's a bearish to bullish reversal. So we have that type of effect in place. Also on the bullish side, EWZ. I've been highlighting some of these international areas for a while. EWJ, which is the Japanese ETF. EWZ is a little bit more on the commodity side, and we know oil's spiking. This one breaking out, it's been in a nice uptrend. Just would be a place that if you were trying to play momentum, I still like some of these international markets a little bit better than the U.S. markets, especially the NASDAQ, which I feel like has really had more of an exhaustion. Right now we're seeing a little rotation into some of the other S&P sectors and out of tech, and I think that could go on for a bit. And here's another international market, KWEB, which is Chinese internet. You can see, again, a little bearish to bullish reversal, inverse head and shoulders type of dynamic. Just had a pullback, which is being bought up today on volume, and we're at this uptrend line and so forth. Just looks like an ascending triangle that will want to move up and out from here. KWEB, you could even look below the surface, individual stocks within that, like JD.com, Alibaba. These are the stocks that make up that group, Sina and Sohu and Baidu and all of these different companies that make up this China ETF. You could look at them individually or just look at the KWEB itself. Now, on the bearish list, here I've got Google, and this one has really gone sideways, so we can't really say it's up or down right now. It's just kind of in a symmetrical triangle. It reports earnings tomorrow, and it's tomorrow after the bell, which would be Tuesday, and I sort of suspect that it will make a push to the downside, that it will leave this consolidation on the lower end. So I was even looking at it as a possibility for an earnings play. I haven't pulled the trigger on that, but Google, it looks kind of interesting from that standpoint. So as a potential bearish candidate, leaving a consolidation, it's had a lower volatility. Volatility can be mean reverting, and since it's done nothing for the last 2 months, could really start to see a pickup in volatility. And the options are sort of depressed in terms of pricing, even with earnings coming up, just given the fact that it hasn't done a whole lot. Micron, this one, again, a tech name. And what I like about Micron is this high wave candle. It tried to push above the 50 MA, and you can see it got pushed right back down. So how does it trade from here? Well, if tomorrow we surge right back above this, then all bets are off, and, well, I wouldn't take a chance on it. But if we stay below this level, and this was a little false move above it and so on, you could, from false moves come fast moves. This could be a little bit of a bull trap where people that tried to buy that little mini breakout are now really getting hurt as it's going the other way and such. So tomorrow would be your trigger, your confirmation of which way it's going to go. And then last but not least, Teladoc. This one I think is just in a long-term downward trend and such. Take opportunities. This would be similar to a lot of other names where I've just been using bigger spikes to get bearish. And here was a recent big spike to get bearish because I still think this is like a lot of other stocks where you might be really surprised at how low this thing can go. Perhaps it's headed into the teens at first and then into the single digits over time. That's quite a bearish outlook, but I think it's a very real possibility. So I've been using the super spikes, and that's a strategy that I've done in GameStop and AMC and a lot of different names. AMC just had a big spike up today on a judge's ruling, and those are stocks that every time you get that big surge higher and then they start to fall apart like this, big spike up and then they start to fall apart, you can just jump on that train and they continue to lead towards lower lows over time. So market outlook, markets are a bit exhausted, bearish divergences at the highs. We've got an FOMC meeting on Wednesday. The Fed is expected to raise by 25 basis points. We've got a PCE, which is an inflation number, on Friday. And then earnings, were right in the heart of earnings season. AbbVie and Boeing, Chevron, Google, Coke and MasterCard, McDonald's, Meta, formerly known as Facebook, Microsoft, Texas Instruments, Union Pacific, Visa, and ExxonMobil. Lots of companies. If you have a stock, there's a good chance within the next couple of weeks it is reporting earnings. Have a great rest of your week, and we will see you next time. Goodbye, everyone.